Hi, my name is Fulton Abraham Sanchez. I'm the CPA of the firm's FAST CPA and Consultants, and today we're going to talk about how to avoid FIRPTA. First of all, FIRPTA is a withholding that the IRS has created for all transactions in real estate that are performed by foreign individuals, non-US citizens. And this is a withholding on the real estate sale, meaning that not on the gain or on the capital gain of the transaction, but on the actual value of the property at the sale. When there is a closing, there is a 15% withholding for every single foreign owner of real estate. When the property is sold, then the attorney of the party that is buying the property has the obligation to retain 15% of the value of the sale and report it to the IRS. That creates a problem because you don't have to pay 15% of the sale. You have to pay taxes, whatever the rate is, relate to the amount of the property. You have to pay taxes on the gain of the property, meaning the purchase of the property, the purchase value of the property, plus the all the improvement minus the price of the sale. That gain, you have to pay taxes at the level that it's calculated. It could be 15-20% maximum, but it's not on the 15% of the value of the sale. That's FIRPTA, and that creates sometimes, or many times, that creates a stress in the foreign seller, because how you're gonna support, how you're gonna have this 15% of withholding from the IRS. Basically, this is for foreign sellers that they have property here in the U.S. Now, there is no way to get away from that. You cannot avoid FIRPTA if you are a foreign citizen owning real estate in the USA. If you own it by yourself, there is no way to avoid this. If you want to avoid it, you have to put the property within a domestic LLC. That will be the first line of defense that you have. So how to avoid FIRPTA? You have to put it in an LLC. That will be the first line of defense. Now, if you own the property by yourself at your name, then there is a way to mitigate or reduce the amount of money that you are going to be withhold. But this has to be in advance, meaning that you cannot come at the end, at the date of the closing, and say to the attorney of the other party, say, do not withhold the 15% because I am going to apply for a certificate of reduction of the IRS. No. If you plan the sale, if you have your closing is within 30 days or 45 days or 60 days, you have to apply for this certificate with the IRS in advance. The sooner, the better, because if in 30 days might not be enough. We have cases that the closing day comes and then the certificate is not ready because there is not enough time. So you need time to apply for this certificate with the IRS in advance. You have to do it in advance, and it's very easy. You ask for the closing document, the draft of the closing document, and with that your accountant will be able to calculate and apply for the certificate to the IRS. And then when you get that, the only amount that will be withhold is the calculation of the capital gain, meaning that you're going to pay taxes at your level of the operation, but it will be the 15 or 20% of the gain of the transaction, not of the full amount of the sale value of the property. So, and many times that is the route that foreign owners of real estate, when they hold it personally, is the way that they do. But remember, this has to be in advance. You cannot do it 15 days before the closing. The sooner the better, because this takes time, and sometimes we have to go to the Internal Revenue Service or the officer that takes the case to try to get that in advance. And sometimes they provide before the letter they provide a fax, right? And that's good. But you have to present that to the attorney of the other party that is buying, because that attorney has the obligation to withhold the money. So if you don't have that certificate and you hold the property by yourself and a personal title, you're going to get 15% withholding of the total amount of the sale. If you get the certificate on time, you will get a tax percentage retained or paid, but it will be only on the gain of the property, not on the full sale. If you have any question, leave your comment here in our YouTube channel, or check our website www.fastcpnconsultants.com.